Welcome back to my channel, everyone. And in this video, I'm going to go over the best day trading strategy, in my opinion. This has to do with supply and demand trading. And really fast, supply and demand is basically the force that drives price in any market. And if you're able to spot supply and demand imbalances on a stock chart, which has to do with the strategy, you're going to be able to take low risk and high reward trading setups based on turning points in the market based on supply and demand levels. Now, this is all true price action. This is not indicators, no lines on my charts. Supply and demand is what moves price in the stock market, or any market in this case. So this video is going to be just a trade recap. It's also going to go into detail on how to use this strategy properly and how to take trades off of supply and demand levels. I post recaps like this on a daily basis on my Instagram. Definitely worth the follow if you're not following it. The link will be in the description below. And also, if you learn anything from this video, all I ask for you to do is just subscribe to my channel. So without further ado, let's go right into the video. Now, every morning I post a pre-market plan, and then I also will have an intraday plan. So it's always important to have that intraday plan and base it around your pre-market plan, because basically the pre-market plan is going to have a guideline around the move for the current day. So this morning we were watching, as always, the S&P 500. I chart the E-mini/ES, which is the S&P 500 future, and I trade SPY options, or I trade ES futures based off of it. So what I was watching was for the 30.59 level to hold. The 30.59 level was a 4-hour supply zone that needed to hold if we wanted to have a bull case. I was bearish if we cannot get above and break above, holding value. If we do get above it, the next zone I'm targeting is 4-hour supply, which was 3,097. The market moves from higher time frame imbalances to higher time frame imbalances. They act as magnets. So a daily, weekly, 4-hour, even a 2-3 hour, all will act as magnets for higher time frame zones where the price will move into. So the S&P this morning was very flat in pre-market. And the first, hour of the market was very choppy, indecisive action. We rallied into the supply zone. Now, every supply or demand zone does not mean you have to blindly enter short or blindly enter long if you're talking about demand. You have to wait for confirmation, and inside supply, you have to wait for sellers to start, being aggressive, and you have to wait for them to start stepping in. Obviously, in this case, we rallied into supply and we held the zone. Just like resistance becomes support, same thing in this case. We break above supply, we come back and test the level. Not every supply zone becomes demand, but in this case, we came back and we tested the beginning of the supply zone in this area right here. So technically, we hold value, and market participants find fair value in this price because we are holding value and basing out in supply. And in this case, it is bullish. So we held value. You could take it long anywhere in this area at a speculation for a nice rally to the upside after we break high a day and after we test that higher time frame imbalance, which is the next, obviously, supply zone above us. So in between the white noise, in between the spaces where there's no zones drawn, that is where the market is balanced, and that is where you do not trade or you do not open any new positions if you do not have any positions opened already from an imbalanced area. Market moves from higher time frame zones to higher time frame ones. They act as magnets, and as you guys can see, we held value in this 4-hour supply and rallied towards end of the day into this 4-hour supply zone at 30.97. So this was a very interesting trade today on the S&P. And going over to yesterday, now you have zones that form intraday. So you have a pre-market plan and you have zones that also form intraday. So it's very important for you to scan through your lists and find imbalances, supply and demand zones that form as the day is moving on. So here we had a 10-minute demand zone at 3,019 and a quarter. Price, after creating the demand zone, pulls back into the level, and this is where you take the position long, putting your stop loss below the box or putting your stop loss below the low that it just created, depending on your risk tolerance. Again, you hold it until the next supply zone. If you're day trading it, if you're scalping it, that is a totally different strategy. But for day trading purposes, you hold from a demand into a supply zone, putting your stop loss below the demand or above the supply zone. So bounced off of the 10-minute demand, and then towards the end of the day, we rallied into this 15-minute supply zone. So from imbalance to imbalance. These are smaller time frame zones, but they form as the day is moving on. This 15-minute zone is formed from 626 after this aggressive drop to the downside, which formed the imbalance originally. You have to look for balanced periods, which you can see right here, followed by an aggressive imbalanced move to either the downside or to the upside if you're talking about demand. In this case, we're talking about supply, so this is a move to the downside. Now, this is on the S&P 500. Now, the next trade I want to talk about, which we were watching today, was on Amazon. Now, Amazon had to get above the $2,700 level, and I'm going to look to get long into rallies for 27.39, which was daily supply that I was targeting. Now, when I say I'm looking for long into rallies, I'm looking for intraday demand zones to start forming. When you see an intraday demand zone starting to form, you can take either calls, if you're talking about demand, out of speculation to the upside. Has higher risk, but the chances of it working out are much higher because obviously you're not waiting for confirmation, you're playing calls out of speculation. Same thing to the downside. Now, I have a video on my channel, I will link it in the description below, about how to scalp. This is the same strategy, but for a higher time frame chart, and you could take it long out of speculation. So here we had Amazon on a 5-minute chart, and here's this daily supply at 27.39 that we were targeting to take long rallies into it. So what happens is Amazon was super strong out of the gate, rallied to the upside, and then we get a normal pullback. These pullbacks are very healthy because what they do is they pull the market back to pick up more buy orders that did not get filled the first time for another rally to the upside. Like I said before, market moves to higher time frame imbalances, and this was a daily supply zone. So now filtering intraday through my intraday time frames, 15-minute, 30-minute, 1 hour, I saw that this stock, Amazon, was pulling back, but healthy, healthy pullback. So now I was going through my time frames, didn't really see anything on a 15-minute, went to a 30-minute and saw a nice basing candle, which means the market is balanced after a rally. Like I said, I have a 5-minute scalping video on this. It's the same concept, but for higher time frames. Saw this basing candle right here, and then once price started curling up, you could take it long after a curl up, or for a safer entry, you take it long breaking out over the high out of speculation that it was going to rally into the daily supply level. Personally, what I did today was I went to a smaller time frame after identifying this basing candle, went to a 5-minute and waited for this to start curling up. I took it long here, risking 27.05 was my stop below this support level. So very small risk for a potential reward into a rally into this daily supply zone on Amazon. Now, the next trade was on Tesla, which is going to look exactly identical to Amazon. Now, Tesla had a nice move to the upside, and then we got that nice pullback, the healthy pullback that I talked about, where the market traded sideways, consolidation. When the market's consolidating like that, you have buyers and sellers agreeing on price, hence why you get a flat trading period. Now, going through my time frames, whether it be a 5-minute, 15-minute, 30-minute, does not matter. We look for that same type of structure to form. We had this nice basing candle right here. Going now into a smaller time frame, once I see that, you could either A, take calls once you see it form out of speculation that it's going to be a nice move to the upside, or you could take calls out of once we break the high a day. So you could take calls here at the 1039 area, risking 1034, so 5-point risk, 4-point risk to an upside, which moved from 1039 all the way to 1087. So about a 50-point move to the upside when you're risking 5 or 6 points. So lastly is on Boeing. Now, Boeing formed a demand imbalance yesterday from the 181 area to the 195 level. This was from a balanced period followed by a nice move to the upside, which created a buy order imbalance here. So now we fast forward and wait for price to first enter that area. And the first time we entered that area was this morning around 10 o'clock Eastern when we bounced off of this demand zone. Now, also really fast, I want to point out, just like the Amazon and Tesla example, the same structure, the same candle that we look for formed right here. Take it long above the high, or take it long first out of speculation, putting your stop loss below this low. Same exact thing. But fast forward to today, bounced off of this demand zone pretty perfectly from the buy order imbalance that formed yesterday. Now, the zone could have formed a month ago, the zone could have formed a week ago. It doesn't matter. As long as price is the first time it's traded there for it being a fresh level, that's when you take the trade. Price dropped into the area from 189 to 181, was due for a relief bounce, could have taken it long in this area, 30-minute demand, stop either below the low, stop below the box, up to your risk tolerance for a nice move to the upside. Obviously, there's more to it with confirmation, with valid zones that I go more into detail with on my course, but besides the point, you don't want to be drawing random boxes where they're not valid supply imbalances or not valid demand imbalances. So it's very important for you to be able to draw proper zones. If you want to message me, if you have any questions, leave it in the comments below. These are not indicators. I get a lot of questions about these being indicators. I manually draw each of the levels. Another question is that my Discord is for members who have taken the course only. The Discord is not open to the public. If you want to follow anything, follow my Instagram. I post trade recaps like this on a daily basis. And if you did learn anything, please subscribe to this video. Thank you.